We will be talking on the role of multilateral development banks, development finance institutions, and pension funds in private equity venture capital development.
Bonsoir à tous. Merci de votre présence parce que je pense que ça a été une journée longue et dynamique, plein de belles conversations. Donc, on va demander votre indulgence. On va avoir ce panel en anglais. And as mentioned by our host, this panel is going to center on the role of multilateral development banks, DFIs, and pension funds in galvanizing the private equity and venture capital space. As we know, these institutions, alongside institutional investors such as pension funds, have a very important role to play in terms of mobilizing patient capital to support much-needed investments around the world. And these institutions are mandated to invest funds in private sector through funds of funds, private equity, venture capital, SMEs, and the like. However, this group of financial institutions often gets criticized for not doing enough, being wholesale bankers, or not coming down to where this financing is actually needed. So we're going to unpack these issues with an esteemed panel here. I will start with Monsieur Jean-Marc Savy de Tove, co-founder and managing director of Adewale Partners, who has 8 years of experience in Crédit Lyon Group, with skills in leverage finance and equity research, and is currently at the UK's, he spent 6 years at the UK's BII, and prior to that had 14 years experience as an SME manager in Francophone Africa. We're also joined today by Belvas Otiono, who's a senior investment officer at the International Finance Corporation, with many years of experience investing in African PE funds and co-investments, with previous experience at Sango Capital. So we welcome him also to the panel. Then we have Mr. Mustafa Maloum, who's the Deputy Regional Director for West Africa at Proparco, which is the private sector arm of Agence Française de Développement. He has previous working experience at BNP Paribas, and also was formerly at AFD itself in Senegal, where he focused on MSMEs. And we also have our head of private equity at African Development Bank, Hadera Alassane Adera, sorry. Yes, covering for our director of private sector and non-sovereign operations, Director Ousmane Fall. So we'll get started with the conversation with an opening question that I will pose to all the members of the panel. In your opinion, why is the participation of MDBs and development finance institutions important to the development of private equity space? What do such entities really bring to the table? Should it not be purely private sector actors that are participating here? And it would be interesting to see from your respective institutions, what case studies can you discuss that really show the value addition of DFIs in this world? Maybe we'll start with Mustafa.
Thanks. Thank you. Good evening, everyone. Thanks for giving me the chance to open the party, let's say. But basically, it's a quite large question. Topic is genuine. The fact is that we've been, actually the African PE space have been mainly outside of South Africa, I believe, and even Nigeria, but in Northern Africa, it has been mainly driven by GFI investments. Basically indirect, but mostly actually indirect, actually. And directly, when you see actually most of the PE funds or even VC funds is the same on that topic, or most of them actually are backed by DFIs funds. So basically, it's a market that has been, let's say, created in the PE space. Has been created in the 1940s, as Jean-André was mentioning it recently in the US, but actually came quite lately in Africa. With some logics, let's say, that are quite different from what we used to experience. So basically more risky for how people see it actually than debt. It brings also some complexity in terms of financial engineering, let's say. So basically or preventing some people or some type of institution to, let's say, invest in that in that area. Basically, most of the GFI, like backed by governments, actually have more risk taken, I believe. And we happen to be more risk taken on this kind of things. So basically need to come and also create that market and help local actors actually to create that market. We've seen, I'm mentioning local actors more specifically because let's say in the beginning of the 2000s, investing in private equity, it was mainly international firms actually, mentioning, let's say, French-based firm, UK-based firms, or even Northern African-based firm actually, investing in Southern Africa, in Sub-Saharan Africa. Now we see more and more local players investing in that area, and we're definitely targeting more and more our investments on those type of actors, knowing more actually how the continent works. Most of them actually also, like, say, previous experiences in international market, etc. But basically more concretely knowing how things works and how to solve issues. Because at the end of the day, it's not an investor world, but it's how to run a company even when you're a PE fund manager.
Thank you. And Alison, how would you respond to this, especially perhaps the view by some that this is the DFIs have a role in signaling where private capital should go by participating in this sector?
Yeah, so thank you, Nana, and thank you for the panel for having me here. So the first thing I'd like to say is that, yes, just like it was said right now, DFIs like AFDB and IFC and Proparco, we actually help establish this private equity industry on the continent in the late 90s by supporting basically first-time fund managers. And we did so because the industry needed to get some comfort in terms of the risk perception in Africa. And so the participation of DFIs were basically, as you said, a signal to the market to say, this is an industry we want to support. It's nascent, it's at the beginning, and we are acting on the continent, we're taking risk on the continent, we understand the risk on the continent, and we're willing to take risk by investing in those structures. So that's what we did at the beginning. So we provided capital, but not really significant capital. As you said, our role was more to be catalytic, to provide a certain amount of capital and hopefully use that signal to attract more investment from other sources. I think we are still in that process. This is why the market is still dominated by DFIs. But increasingly, we think that we need to find a way to attract more institutional investors from Africa, pension funds from Africa, institutional investors from outside of Africa, and commercial private investors into the private equity market space in Africa. The last 2 points, we provide capital, but we also provide standard. When we come and we invest, we come with policies in terms of environmental and social. We monitor. We look at governance aspects in the funds that we invest in. So we play multiple roles by providing capital, by setting the trend in the industry, and by also raising the standard in terms of policy, ESG, increasingly now climate, and also gender.
Very good. So let me move to Belvas and ask what you might add to this from the perspective of ISC. Also, would you agree that the role of DFIs and MDBs is for actually de-risking, even though we see equity as from the perspective of MDBs as quite risky in terms of instrument, is its power actually in de-risking for other liquidity providers to come in alongside?
Thanks for the opportunity to be here. I'm not sure, am I allowed to say nothing to add to what Mustafa and Alassane have said? I think they've described it all. But just to put it in other words, yes. At the heart of what IFC does, we believe our role is to catalyze private stroke commercial capital, go where private capital, stroke commercial capital is still not comfortable going. And I think, as Alassane put it, that's the way the industry started. And I think then it took the right trajectory in terms of, we know funds which, in the boom period of pre-COVID, basically raised almost all their capital without DFIs, which I think is what should happen and allows us to kind of go to probably markets that are relatively less developed. I'm thinking of like Francophone West Africa, for example, and say, okay, let's now back these players. But I don't know if it's fortunately or unfortunately, I think we are back at a place whereby, especially post-COVID, even for the more established managers, we are at a place whereby I think we also see our role as in this cycle when a lot of commercial capital has pulled back from Africa. We see our role as almost like holding up the market and hoping that the cycle turns and that the private or commercial capital can come back. Thanks.
So maybe I will move to you, Jean-Marc. You might have a different perspective coming from Adewale Partner, so maybe you can discuss what has been your relationship with the DFI community to date in your organization, and what do you think about what the DFI seated here have mentioned?
Okay. Because DFIs are my investors, I need to make sure that I stay nice. Otherwise, I'll have issues here, right?
We won't tell. We won't tell.
Okay. Chatham House rules. You don't say what you heard here. Well, my view on this subject is a very simple one, and it's based on what I've learned over time. I was a DFI. I worked for 6 years at CDC Group, which became BII. I was running the investment in Africa for them. One of the things that I learned when I did that was that everywhere in the world, private equity started with pension funds, insurance companies, or banks, everywhere, except for Africa. I know we Africans like to have a differentiating factor, right? But I think as far as in Africa, we raise our capital from DFIs, we should not call it a success. It is a failure. I'm not saying that DFI should stop putting money in our funds. Otherwise, I won't be able to feed my kids. But what I'm saying is that we need all to do the work of educating our pension funds. You look at Africa, outside of Northern Africa, outside of Southern Africa, the middle in Africa doesn't have, the pension funds pushing for private equity. Let me just try and remind ourselves of why private equity. It is because it is one of those areas of finance where you invest, and because you're so close to the company, being at the board of the company, having built a working group or a strategic committee, being able to replace some of the management, being able to instill governance, you have a much better company than it would have been on its own. That's the core of private equity. That is the core of private equity. So what does it do to a country or a region? First of all, it creates companies that are better run. We all talk about governance. especially our politicians, right? I'll stop there. We all talk about governance, right? But governance is key. Managing a company properly is key. Helping a company grow faster than it could on its own is key. And what we've been trying to say to pension fund is the following, very, very simple. We at Diwali Partners, as a fund manager, we back local companies in Francophone West Africa. When we put money into those companies, we have a plan to grow, and the company is growing. The company recruits people, right? Formal jobs. What does it do? Formal jobs means you actually send money to who? The pension fund, retirement, right? You do that. Same thing, money goes to the insurance company, coverage. Even before they make money out of the PE funds, they will have been making money. We told one insurance company, why don't you back us? We're very happy to sign a contract with you to the extent where most of the policies that our investee companies will be taking will come to you. That's pretty much free money because you don't have to send your people out, look for that policy to come in, etc. I think the issue we have is simply that because of how some of our pension funds were set up, they don't necessarily see PE as something that is key for them for the future. If you are in Francophone and you have real incentives to put your money in government bonds and you're making 6%, why would you go and look at private equity? If you are in Abidjan and you see the boom in the real estate market, why would you go and put your money in private equity? So I think ultimately it is our job, and that is our plea to our LPs to help us talk to those who are asset gatherers in our region that are able to make our industry thrive.
Thank you so much. You're raising a lot of interesting and good points. And I had a bit of a cheeky question in terms of mobilizing institutional investor capital, sovereign wealth funds, insurance companies, and pension funds into this sector is, would you want your mother's retirement in some of the assets that are in your private equity funds, right? Because the perception is it's a very risky sector. How will that retirement pension money be secured? So it would be interesting to hear from members of the panel what protections or what regulation or what policies, we're talking about standards and governance and technical assistance, and this is what the DFI community brings to the private equity space. But really to unlock that capital from institutional investors, do you think that there's a need for more regulation, or is it really just behavioral? Is there something, for example, risk appetite and risk profile in terms of regulation that prevents these type of institutions in getting involved, or is it really just a behavioral, that they can get returns more easily just buying a government bond? So, Alison?
No, I think this is, Jean-Marc raised a very important point. From my perspective, I think, yes, DFIs like us need to work with fund managers, work with regulators to try to mobilize more institutional capital from insurance company, from pension funds. This is something that we are trying to do increasingly at AFDB. There are some regulatory constraints, that's true, so that needs to be worked on. Sometimes there's some lack of capacity or understanding of the asset class itself, so there's some capacity building, training, education that needs to take place. And we need collectively to work towards finding those solutions. But I would say, at the end of the day, this is not debt, this is equity. And equity investment by nature are risky. They are riskier, and so they are commanding they're requesting higher rate of returns because you take higher risk, of course. And so I would also put some of the work towards the camp of the fund managers to make sure that this industry in Africa starts generating returns that would attract more easily institutional capital's money. Because I'm sure, at the end of the day, it's a business. If you can demonstrate to the pension funds that by putting money into your fund and the companies you're investing in, you're able to demonstrate that you are generating returns in addition to impact and all the things that you mentioned, governance, improve efficiencies of operations, etc. But it translates into higher returns, then you would start seeing more capital coming in addition to the regulatory constraint. It's actually something that you start to see in the industry now. After 20 years, 30 years, fundraising becomes more challenging because providers of capital are saying, okay, we've been supporting the industry for 20 years, we had impact, but what about the returns? And if the returns are not there, people are starting to become a little bit cold. So I think it's a collective work that we need to do, but I think at the heart of it is not behavioral, but it's basically the ability to generate higher return. To conclude, I think Africa is now at the stage where, for the first time, we can start to project and anticipate higher returns because of digitalization. Companies start to be able to reduce costs by using digital technologies, and they can operate by reducing costs much more significantly than in the past. And on the revenue side, they still, our economies are still growing quite fast. So the margin becomes all of a sudden better. And I think with all the population growth and all the natural resources that we have on the continent, normally we should be able to get more returns. And this is what we think at the FDB, and this is why we support the industry.
Thank you so much. So I think some feedback for the organizers might be to get some of these pension funds and insurance companies in attendance. I don't know if they were here earlier in the day, but I think that having proactive engagement with some of these entities in illustrious forums like this would be a starting point. So the conversation has brought up what I might call underperformance of African assets in terms of return and hurdle rates that are expected by the investors. So Belvas, I wanted to ask, as we've heard, there is some noise in the market that returns in Africa are not hitting expectations. Where would you say we are in terms of the development process of private equity in Africa? And maybe focusing on Francophone Africa in particular, do you believe the foundation is set and really we're going to be moving away from the DFIs because that hurdle is there, the returns are there, and so it will naturally attract what I call the amoral market, which is, not DFI where we have ESG at the center of our universe, but really commercially driven players, or is it still too soon and the hand-holding of DFIs is required for another 5 whatever years?
It's an interesting question, which I think is coming up over and over again. Look, I think if you look at African peers and index, I think the numbers speak for themselves. They've been underwhelming, if I could use that word. But I think you need to go below that surface and kind of look at the individual players. And you see a mix, right? There are people who, and I guess there can be a debate on which measure you want to use, but if I can just use hurdle, there are people who have been consistently managing funds that at least meet hurdle, and then there are some who are probably lagging. And I think it's important to kind of, while even the people above hurdle, there's room to improve, I think we need to figure out what are they doing right, and where people are like lagging. Are there lessons that can be learned across the board? And I mean, as LPs, you have the purview of seeing both. Of course, you will have confidentiality, but you can kind of have conversations on a no-name basis. But again, and Jean-Marc raised something interesting, right? In terms of, I think the biggest problem with African PE over probably the last decade has been FX. I mean, if you just see what FX has done across a number of countries, like in Africa, has basically wiped out returns, right? I guess if you're diversified geographically to some extent, it helps. At least from our data, the more geographically flexible a fund is, the more we've seen it perform a bit better. And then, of course, if you're blessed in a place like Waimu, I mean, you don't lose sleep over FX. But I think at this point in time, and those conversations are being had, right? And I mean, Alassane alluded to it. Actually, when we talk about impact from us, we actually believe impact includes financial returns. Because, I mean, as like Jean-Marc was talking about companies, if you're basically burning all the cash, then those companies that you're talking about that are supposed to create jobs and do all the nice things are not gonna be there, right? So that conversation needs to be had very honestly with the market and say, look, this assumption that you're gonna raise funds from DFIs regardless of what you do doesn't make sense. And basically what's happening, it's already happening, right? Currently, if you come to raise, we'll want to see what the metrics look like. And I'm talking about, and when I talk about the metrics, I'm not talking about ESG metrics and development impact metrics. We have a team that's gonna look at that. We wanna see, have you distributed some money back? And basically what happens, I think the African market is going through some process of natural selection, and people are kind of waking up to say, look, as I don't think it's sustainable that this market will be into perpetuity supported by DFIs. And to be able to bring that private capital in, whether it's international or local, people need to figure out how to make money, some returns. And then look, would I say the role of DFIs is done in Africa? I don't think so. On one part, I think even within Africa, markets are at different stages. I kind of mentioned, I mean, if we look at this region, people are in Fund 1s and Fund 2s. I think that's still early. I think DFIs still need to help the market move up the curve. I mean, it would be great if, as Jean-Marc says, you know, the banks and the pension funds just step in and say, guys, forget about it, get out. We're gonna take over. We'll be happy to like do that, but we don't think that's realistic. And then, as I said, even for the more mature managers, what we are seeing, at least post-COVID, is the necessity for DFIs to hold the market and hope that the message is landing, that returns are important, and that the cycle will turn, and that the commercial investors will be able to come back in, and DFIs can go back to their role of basically catalyzing the relatively less developed markets.
Very good points. Thank you for that. And I think the point about FX is absolutely critical. And one of the beauties of this region, you know, we talk a lot, when we talk about private equity and venture capital, obviously Nigeria stands out like a giant. And I just have a statistic here that says West Africa attracted the largest proportion of venture capital deal volume in Africa, but it's driven by Nigeria, which is the most active country by volume. So I think there is a need to emphasize the fact that in this region, we have the PEG. It's a beautiful natural hedge for a lot of these things, and I don't think that we're really emphasizing that enough. So thank you so much for that point. So maybe coming back to Mustafa on this this conversation about returns, you know, as Alassane mentioned, we're putting risk capital to bear. You know, this is not debt. This is expensive. risk capital that DFIs are putting behind these private equity funds, but we haven't talked so much about venture capital yet, which is even more risky, more expensive from a risk capital consumption point of view. And then to not get the returns, it makes it particularly, controversial, let's say, in some of our institutions. So I just wanted your perspective of how is your institution really addressing early stage businesses, so getting away from PE really into venture capital. Did you have to adjust certain internal frameworks to be more responsive to market needs, for example? What is your institution doing in that area?
Yeah, thank you, absolutely. We take VC as something very serious. And basically right now, we started VC at Popoko back in 2019. Let's say we really started in 2021. We started it only in Africa. And up to this January, all our VC investments, VC investments were in Africa. We started the first investment in India beginning of this year, but actually it will be like one deal per year. Most of our VC business is in Africa, basically. Investing in VC for us is investing in the transformation of our continent, basically. Outside of digital transformation is the real transformation of our economy, of the way things are done. So we take this very serious, and for sure, like we cannot do it like a regular business. So let's say I see three main points actually: it's people, it's risk, and it's process. So the three things that we needed to, let's say, make or move actually or change a bit in order to be able to deliver on that agenda. VC for us is $35 million USD in Africa per year, which is not that huge, but actually it counts. So what we've done first is to create a specific and separate VC team. So basically, we have a team of 6 professional based out of Paris looking at our VC deals, and then started from 2023, so 2 years ago, we started putting some specific VC teams in our African hubs. So basically here for West Africa, we have 2 people working specifically on VC transaction. We have people all around actually Africa, two people in Kenya, 1 person in Nigeria. We don't do VC anymore in South Africa. Actually, the market don't need us. So basically, we decided to stop VC in that market. Even in Jersey, we have 1 person looking at VC actually. So basically, that's how we've shuttled that down in terms of organization. We started doing VC, but with actually what DFI. So with our current process, taking too much time, doing things too slow, having people, let's say, at the risk function or credit function, looking at VC transaction like it was debt transaction actually. So we said, actually our CEO said, stop, let's see how we can move that things forward. And we decided actually to review our whole process. So move it to a process which is more like, let's say, likely to a VC fund, which means having a first shark tank, let's say, before our initial screening committee, saying, okay, do we want to do that transaction? Do we want to allocate time to this transaction or not? We have a team, 6 people, 6 plus the African colleagues actually on the ground voting. If the majority wants to do, and nobody has a veto, we go and go forward on the transaction. Then looking at this, we say, okay, there's some really, let's say, repetitive things we see in that industry. So basically, if there are some red flags actually that we see, if those red flags appears, it means that the transaction could be quite complicated. So for all, we have let's say, a list of 20 red flags. If any of these red flags is not actually hidden, then we don't actually have the credit team in the process, basically. So now on the direct VC transaction, I believe like 75% of the transactions we're looking at are not reviewed by our credit team. 100% managed by operations, investment teams. And we have, let's say, annual review of what we've done, et cetera, et cetera. So basically that helps a lot because we gain time, we gain efficiency, and we gain also mental health, I believe, on the team side. So with that being said, outside of this point, on the risk also, it's a risky activity. We're mentioning return, we're mentioning risk. It's definitely a risky activity. I won't say that we're earning a lot of money out of that business right now, but we need to be intentional about what we're doing on that tech space, right, in the continent. So looking at this, we say, okay, we need to find ways to de-risk our business, de-risk that VC business in order to do it actually into, let's emphasize this business, otherwise we'll close it. Because even if we're a GFI, mainly owned by the French government, basically we have 50% of our shareholders that are private, actually, companies from Africa, from South America, and from Europe. So basically that's looking for return. So on that space, we say, okay, how can we engage with donors? How can we engage with states, let's say, institutions, to de-risk our business and have quite of our risk taken into consideration by subsidies. So we've been to the French government, asked them to see how they can support actually our VC business and, for example, de-risk 50% of what we're doing in the VC space. So they came out a couple years ago, up to this year actually. You've seen all the debate around public development and everything in the area. We've done something great that we anticipate all that. So we're not relying anymore on the French state for that, but on the EU, which gave us quite a huge amount of money in order to de-risk part of our VC activity. So which will help us actually for the next 5 years emphasize, and we're looking actually at bringing that 35 annual million of investment to 50 million now, and also so basically that's what we've done on the process side. Last but not least, because the most important thing for us is that we've said, okay, in order to be relevant in the environment, we need to be actually working on the whole continuum of VC needs. So basically starting from the inception of the company to Series B/C. So what we've done, so outside of de-risking our own balance sheet, because what we're doing actually for pre-Series A, Series B, Series C is on our balance sheet. For more early stage investment, we created a specific affiliate named Digital Africa that is fully actually outside of our balance sheet, fully, let's say, capitalized as a, let's say, investment company, which is not regulated like Proparco is, etc. And this one is specifically investing in at the inception, like very early stage ticket from 20,000 to 100,000 euro for African, let's say, Francophone African businesses right now. In our side, we're looking at safe transaction for larger tickets from 150 to 600,000 euro, and then doing Series A, Series B, Series C, etc. on our balance sheet, but partly de-risk it.
Amazing. Yeah, so you mentioned that the European Commission, I think, as well, they've been a tremendous supporter of SMEs, venture capital across the African continent. So us at African Development Bank, I've also been in many discussions with them on a number of initiatives. So it is critical to have shareholder and entities like that involved to help us to engage further in this space. And it's very good to hear that Proparco has 35 million dedicated to venture capital. I'm reading here, for example, that the median venture capital deal size is 2.5 million. So you're doing at least 10, 20 transactions a year. So that's very encouraging. So that being said, I'm on the stage. There's one of me and there's four of you. So I would like to also shift gears a little bit, given the DFI's mandate, to ask about gender. I'm reading a statistic here that says only 24% of funding recipients were startups with female founders or a gender diverse founding team. I would like to find out, starting with Alassane, what are your respective institutions, companies doing to bring more parity in this space? Because we know globally women are underfunded founders?
Yeah, so we are quite proactive. We are actually one of the biggest advocates of reducing this disparity. As you know, we have a gender strategy at AFDB, which is basically a strategy that is cutting across all the operation that we do, whether it's private equity, venture capital, loans, guarantee that we do. And we are very intentional about starting to look at gender lens investing. Actually, even before starting there, when you look at the senior management team at AFDB, it's mostly the position of basically I don't have the statistic, but most of the VPs are women. So moving into the funds industry side, we are very intentional about identifying and supporting women-led fund management teams, those who are investing in women-led businesses. We invested, I think it was in 2015, we invested in Alithea Fund 1, which is a woman-led fund management team. It was a $100 million fund approximately. They invested in women-led businesses with a lot of impact. And for us, we were an anchor investor of this fund. And it was basically to demonstrate our intentionality. We're doing this purposely. We have invested in certain venture capital funds. I'm not sure if I can share the names, but I think it's public. We invested in the TLCom group, Tide 1, Tide 2. I think they are majority owned or led by women as well. In our criteria, actually, when we look at new private equity funds and venture capital fund, we added a criteria which is, a gender criteria, which is, are these funds led by women? Are the investment committees dominated by women? Or how many women are there? So we are very intentional. And then the last point I would say, we have this flagship initiative, which is called AFAWA, which is the Affirmative Action for Women in Africa. So it provides funding, it provides technical assistance, advisory services, all geared towards reducing this disparity. The gender financing gap in Africa is $42 billion. So it's huge, and we all collectively need to do more to try to reduce this disparity.
Does anybody else want to add? So I'm assuming we're all gender champions here. My favorite thing to do is to identify African men who are gender champions. So you all have to be one.
Yeah. Let me. I would like to do two things, if you allow me, Nana. On the gender point, my partner Viso and I decided that when we started at Diwali, that we wanted to do our own gender thing even before our LPs will ask us, because we saw that coming, but we did it the very wrong way. I.e., we recruited a lot of women so that we have more women than men. But what we did not do is go through the tests that we usually do to people before they join us. So it's not because you have good intentions that you have the right to do it the wrong way. That is something that we've learned. So now we're trying to adjust on that. We're not a 2X or whatever, that's not what we're after, but we believe in it. It's just something that should be natural, but you need to look for talent, full stop. That is key. I would like, if you allow me, to come back to an issue about the narrative of Africa. We all African people around here, right? The bank is the bank, it's African by nature. You are Propalco, but you're African, right? You're Mustafa, so, you're Belvas, you're African. Private equity in Africa works. The only thing that makes it not work is currency. We need to own that narrative over time. If we don't do it, nobody's going to do it for us. That is key. You look at the first fund in Africa, it's called Comafin, 1990, South Africa, returns in local currency. It was set up by CDC. made money. You look at the second wave of funds in Africa, 1993, Oreos, West Africa, Oreos, East Africa, and Oreos, Southern Africa. West Africa made money big time in CD terms, not in pounds. If we do not own our own narrative, we're not going to make it. And one of the ways to own our narrative, again, is to make sure that we put our own money into this thing. That is where the bottleneck lies. The second bottleneck, and all DFIs know it, at CDC we used to have two pots that we set up in 2006. Those funds that we back to make returns, and the funds that we back to instill something in that specific market. If you do not separate the returns of the two, you put it all together, you believe that private equity doesn't work in Africa. It does work, but we need to own the narrative for ourselves. For me, that is absolutely key, you know. And from where we're sitting at Diwali Partners, the reason why I decided to leave CDC and come back to this region was that I was so frustrated. I backed so many fund managers, Helios, ECP, who else? Oreos, all those guys. Cyril is not happy with me because I wanted to back him, but we never managed to do so. And actually, there's somebody that I see at the, oh, if you allow me, I would like the crowd to applaud people that are, you know, are stars in what we're trying to do in this market. Danladi, can you please stand up so that people know you? Verot Capital, Nigeria. Cyril, can you please stand up so that people see you? Enco Capital. VCO, can you please stand up so that people see you? At Diwali Partners. I swear to God, each of those individuals will have made a lot of money doing something else. And sometimes we don't have the courage to come. I actually did with Belvas, and we became friends. We don't have the courage to go to our LPs and say, hey, what we're doing here is really tough. We need your help. But where the bottleneck is, you DFI, you have how much money? You probably have $1 billion, euros, whatever, for Africa. But what Africa needs is 10 times that in private equity. So the one thing where we should all focus, in my view, is how we put something together so that we can convince, again, those people that have the money on the continent of Africa to put the money into private equity. Basically, we have the battery, have the cable, but we need to plug the cable so that we have the light, right? If we don't do that, it doesn't work. One quick example that I saw, and I'll finish on that. Back in the days, I think it was 2008, 2009, the Commonwealth Secretariat, the equivalent of the Francophonie for Francophone, put together this program where we went to Ghana, we went to Nigeria, we went to Kenya to talk to the local asset gatherers, the pension funds, and said to them, you know, for the future of your countries, of your regions, we need to put money, you need to put money into private equity. In Nigeria, it worked fairly well because for some reason, we were lucky. There was this fund manager called Capital Alliance. Their first fund, $35 million, returned 10 times capital to investors, 10 times. MTN, as you said. But when you strip out MTN, they were still almost at 3 times, right? But those are examples that we need to talk about. And there was this lady in the room. She was called Titi something. Forgot her surname. She was so impressive. She took the mic and started talking about why she put money into Capital Alliance. She made that money. And all of the pension funds in the room decided that they would put money into PE. Next, what happened? PENCOM, the pension commissioner, came to see us in London and said, we want to put money into private equity. Help us sort of fine-tune our policies so that we can do that. And we said to them, and they said, well, we want to put 1% into PE, 1% of our assets into PE. But what we decided to do is that we'll do it if you, CDC, or IFC, or EIB, those three players, are in the fund, will come at second close in that fund. And we said to them, fine, let's go ahead, but open your eyes, because sometimes we make the investment not to make money. But just to give that example that those things are doable, we tried to bring them into Abidjan, but at the time it didn't work. The Commonwealth Secretariat said that the only country that they could go to would be Cameroon for Francophone. Whereas the feeling at the time was that there was no PE activity apart from Seninvest back in the days in Cameroon. So we ended up not having that session. I really, really think I'll go see Alassane in the next few weeks. I'm getting ready for it, to try and convince him, to convince all of our LPs to make that happen. Because we need, look at India. India and Africa pretty much have the same GDP. India and Africa had the same GDP 12 years back. India is doing a bit better. You look at PE, right? The number of people, pretty much the same, 1.2, 1.3 billion, pretty much the same. You look at the number of fund managers. In India, you have 500 plus. In Africa, you have 230. We have half. Whereas some of our investors are telling us there are too many of you. And we're like, what are you talking about? We are in Abidjan here. How many fund managers do you know in Abidjan that were set up in Abidjan and that are looking at the Francophone region? How many do you know? Yes, Adiwale. But the reality, what I want to say here is that we know where. So we can't be having a conversation about there's not, there are too many fund managers. The bottleneck is that there's not enough capital coming in. You look at Africa, at the maximum, we reach $5 billion raised from investors, mainly DFIs and other type of investors, especially for the bigger funds. You look at India, 10 times that, 50. So what are we talking about? Same GDP. Obviously, we have 54 countries, yeah, but they have 20 states, right? So there are a lot of similarities. At the end of the day, I think the biggest bottleneck, first, is attracting the local capital. And second, I shouldn't say it, but I'll say it, making sure that DFIs back only those managers that will bring money back. Not the ones we know that will not bring money back. Thank you.
Wow, that was such a passionate intervention. Yes, let's clap for him. And I think that we have to close, but I really did like the call to action to the DFIs, so thank you for that. I want to thank everybody for their attention, and I just wanted to give the opportunity to each of the panel members to say a last word, but I want to know, going forward, what is the one thing in 3 words that has you most excited about private equity from a DFI MDB perspective? And you're not allowed to say artificial intelligence. Okay. Anybody want to go first?
Yeah, I think Jean-Marc has put out, look, I think the realization that we need to do our best to compete globally, So I know there are shortcomings. I had earlier speakers talking about financial engineering and all that, but I'm like, in the context of Africa, for us as a collective to say, you know what, we are doing our very best. I think that to me is the most important thing.
Africa for Africans.
Yeah.
Okay.
That's what I would have said actually regarding Pan-African M&A transaction.
Yeah.
I'll say I see more and more interest from, let's say, larger countries, like the big guys like Nigeria, like even South Africa, or Northern Africa, actually, Morocco, looking at doing more M&A transaction in the region.
Yeah.
So basically that's the thing that's I believe,
Cross-border
like, cross-border.
exits, regional integration is not just about roads. Great. Alassane? anything to add?
No, I think they said it all. I think we need to do more to attract capital from local pension funds. We need to work to make our environment more stable, to own the narratives. I think there are also some very attractive sectors that are coming in.
Yes.
Personally, I like very much the creative industry sector. I think for Africa, I mean, it's not yet proven, but sport, entertainment, fashion, etc. These are very exciting prospects for private equity and other investors. So I think the future is looking bright, and we need to continue to support.
Thank you so much. And with these words, please help me to thank the panel members. And I'll hand back over to our organizers.
And we were all passionate, we must say this, we were all passionate about your speeches, about this panel. We were all glued to our seats, listening carefully to you guys. A lot of people are not into equity or finances, but indeed we were drawn. And I really want to give it up for the moderator who, like a great teacher, like a great mother, like a great mentor, actually led everybody to a beautiful discussion. Please give it up for her. Give it up for the beautiful panel. And I will be asking Jean-André Aipo, who's had long weeks. He's had long weeks preparing this event with the team here. On va ovationner bien fort Jean-André Aipo, qui va nous rejoindre. No, please, be seated. Jean-André Aipo, great idea, great initiative. This is the second one, and hopefully, inshallah, we have a lot more to come. It was very, very interesting. Jean-André Aipo, I would like for you to come here. We are closing this first day of up to 7 panels. What's your take, your impressions, and what are we expecting tomorrow?
So I just want to thank our panelists. As usual, they were great. And I know Jean-Marc is a friend of mine. I know he will give the best of his mind. So thank you. The day was long and people were tired, but you gave your best. And I want to thank the audience. Thank you for being there since 6 o'clock for some of you until now. And it wasn't an easy day, but you have been there. And I hope tomorrow you will be there again. Thank for what you're doing for our countries, because we need to do it for Africa. Basically, actually, what we're doing is for our countries. If it was for us, I do live in Europe. So people are crossing the sea to go there. I'm coming back. So I'm doing it for my country. And I hope a lot of people will help me to bring these events higher and higher in the upcoming years. So once again, thank you for being there. And I hope you will be there tomorrow. Tomorrow we'll have a lot of other panels. And I hope the panelists of tomorrow will be also great like the ones we had today. So thank you, all of you, and see you tomorrow.
Thank you very much. My co-host, your word, it was a tasteful day today.
Yes, for sure. It was a wonderful day. It was wonderful seeing the people in the room. It was wonderful getting to share ideas with the population that was here. And also, I learned a lot, honestly. I have a book. I don't know how full it is now, but I'm going home rich. I feel like a rich lady now. I don't know who else is as rich as I am, but I feel very blessed and honored being here. Thank you all for being here. And remember that it's not yet ended. We are just beginning. So tomorrow we are going to be having some panel discussions, right?
Effectivement, on aura des panels demain. Donc, Abidjan, Private Equity and Venture Capital Summit, seconde édition, continue demain 4 avril avec des panels tout aussi intéressants que ceux d'aujourd'hui. On aimerait donc tout un chacun suivre la page Abidjan Private Equity et Venture Capital Summit sur Facebook où nous avons plus d'infos et n'hésitez pas, demain, prenez d'assaut donc l'auditorium du Palais des Congrès du Sofitel Hôtel Ivoire pour une journée aussi riche demain 4 avril. Merci à tous d'avoir été présents. Merci Monsieur Bonny, Herman. Merci à toute l'équipe